It's time in the market, not timing the market. Okay, so I have to adjust my jacket here because this is a big one.
Okay.
Right? I think this is one of the biggest mistakes. That makes my blood boil. When you fake the fact that you're an expert and give people ill advice, that's gonna harm people. There's one word for it: stupid.
Are you ready to buy real estate in Dubai, but wondering how to do it and what mistakes to avoid? Or are you worried about some of the myths that might be out there? Well, today on the Dubai Connect podcast, I have one of the most experienced and respected figures in Dubai real estate to help answer some of those most asked questions, like what is the biggest mistake that people make when they're investing here? So welcome to the Dubai Connect podcast.
Welcome to season 6 of the Dubai Connect podcast, a top-ranked Dubai real estate show. I'm your host of the Dubai Connect, Ghada Benitez, a certified international property specialist and a licensed realtor connecting global investors with prime real estate opportunities in Dubai's thriving market.
Okay, so today on our episode of Dubai Connect podcast, I have back Mr. Tariq Jarrar. Hi, Tariq.
Hi, how you doing?
I'm so good now that I have you here.
I'm very happy to be here, as always.
Always. My most well-dressed guest, as always.
Thank you.
And Tariq Jarrar is the executive director for DevMark.
Correct.
But Tariq, just so people understand, what I'm trying to do on the Dubai Connect podcast is bring top experts.
Correct.
Because where I understand American mentality, North Americans, I'm licensed in California, but I cannot make up decades of experience. So may you share a little bit of your history before you got to become, or before you position yourself to become, not got to become the executive director of DevMark.
Okay, great. So I grew up in the UAE many moons ago, and at the age of 14, I moved back. I moved to the States, where I graduated in finance and banking. So that gave me, a financial background. And then I came back to the UAE, Abu Dhabi to be specific, where I worked in Citibank for almost 6-7 years. Moved on to Standard Chartered Bank and so on. So I had a 12 years of banking experience on the selling side. And then I decided in around 2003 to venture into the world of real estate. At that time, there were no rules, no regulations. It's a new market, and that's how I started my experience. So I worked for all the top developers in the region, and about 8 years ago, I got together with my partners, and we started DevMark.
And may you explain a little bit about what DevMark is?
Of course. DevMark, we are the largest project sales and marketing firm in the region. To simplify what we do is that we basically work exclusively with developers. We provide them with sales and marketing strategy, and we help them take the project to market through working with our partners like yourself.
Fantastic. Safe to say, you are well knowledge, well experienced, that you work with so many different developers, so it's not subjective just to one. And because of the financial background and working in the UAE is total, not just pigeonholing us just in Dubai, because we know, for example, Abu Dhabi, savvy investors are
100%.
Right?
Yeah.
And you and I have a shared passion for
yeah,
Abu Dhabi.
Yes.
So you know what you're talking about, basically, because there are a lot of people out there, even on podcasts, I'm not going to mention names, that provide misinformation and misdirect investors. And there are a lot of myths and misconceptions that I'm trying to get ahead of to help allow North Americans and European global investors to feel confident with the right facts and information in order to strategically maximize their investments here in the UAE.
I think this is one of the biggest mistakes, although it's not on the list.
Okay.
And we can talk about it later. Is that there's a lot of people that come in and pretend that they're experts, right? And they go out there unchecked, and they'll give you their opinion, and they'll tell you, oh, I think the market is going to do this, and I think the market is going to do that, and they're not backed by any statistics, fundamentals, and a lot of them. And I've been in the market for quite a long time, and I know who really is a sort of an authority on these things and who's not. So you're 100% right. And that's why a platform like yours, if I might call it a platform, is extremely important, because you've vet out the people that are on your broadcast, what you're going to talk about, and how you're going to educate, your public. So it's quite important.
Thank you for saying that. You triggered something when you said that right now. My first major job out of college was pharmaceutical sales. Okay. And I called upon cardiologists. So I want you to imagine that I'd have to walk into some of the most educated people's offices in the world. Cardiologists are, that's the most educated, I think, other than cardiac surgeons, as far as years of schooling. And I would have to sit down and have a conversation with my bachelor's degree in economics to persuade this cardiologist to prescribe my company's medication over the competitor. You better believe that before I entered that office, I knew what I was talking about with understanding the difference between significant versus statistically significant, data, etc. In order to engage confidently, which I did. I was top of my game. I was rookie of the year, sales rep of the quarter, year after year. So, but again, a bachelor's versus a cardiologist. And that ingrained in me at a very young age. I was only 24. Oh my God, that was 26, 27 years ago. And here I am. Always know what you're talking about before you present it. Like there's this mentality out there is like, what is it? Fake it till you make it?
Yeah, there is. And I hear it a lot and I don't appreciate it.
No. And maybe in some industries it works, but not for me. Because for me, honor, integrity, knowing what you're talking about is the most important.
If I can just comment on that.
Yes.
I mean, yeah, you can fake it till you make it. For example, you want to wear a fake watch until you can afford the proper one. But when you fake the fact that you're an expert and give people ill advice, that's going to harm people. That's not you in trying to fake it. So, I don't appreciate that, especially in our industry.
In our industry. Now, imagine the Americans that we were talking before this started. I'm finally seeing the fruits of my labor of doing what I've been doing. And we're seeing Americans coming in here now. But they are still a skeptical audience because there is this whole preconceived notion of the Middle East, of Dubai, of the UAE being in this volatile area, not understanding, like you were saying, that this is the Switzerland of the world, right? That they play it very smart and safe here. But that's not necessarily well known in the United States. So now we have this very skeptical audience. If they're hearing about Dubai, they're curious, but we need to give them factual information. And for example, just one thing that, if you get the golden visa, then you're going to secure a lower interest rate because now you're a resident. Wrong. So now what do? I bring Mortgage Finder, Warren Philiskirk on here, who is one of the first 4 mortgage lenders ever. Yes. Let's talk about that. They can just take my money. They can close my bank account. Wrong. I bring the DLD on here, the government themselves. And so now with you coming on here, I'd like to hop into some of the mistakes that buyers can make so we can help them avoid it, Tariq, and some of the myths. So we can start off with something that you are very well knowledgeable on, and that's about timing the market, entry and exit. What's your viewpoint and your expert opinion on this topic?
Okay, one thing I just want to point out here that whatever we're going to talk about today is in no particular order.
Sure.
Okay, I mean they're all important, and we're going to cover all of them. Now, timing the market, and I smile because this is something that I've been dealing with for 36, 37 years. When I started in finance, that was the first thing. It is almost impossible to time the market across any asset class, okay? So imagine how it is with real estate, but then imagine how it is with Dubai real estate. And let me explain why.
Please do.
Okay, so when you normally try to time the market, you will miss on opportunities. Right? I mean, how do you know that this is the right time versus the wrong time? Okay, so that's a general thing. But when you're talking about real estate market in Dubai, okay, Dubai real estate market is very dynamic. Okay, there is market sentiment. Okay, where in one quarter they feel that this particular area or this particular development is hot and is trending, right? And maybe a couple of months after that it changes. So it's a very dynamic market. The other thing is that there's a lot of internal policies that are issued or they come out at a drop of a hat that positively impact the real estate market, and then all of a sudden you see a surge. So it's a very dynamic market, and it's very difficult to time it. And if you time it and wait for the right time, then you miss on a good opportunity. You might end up waiting and getting the product that you want at a higher price. So it is very, very difficult to time the market. And what I'd like to say is that it's time in the market, not timing the market.
I love that.
Yeah,
time in the market.
Me too.
Not time in the market. We should trademark that. We'll talk about that afterwards.
We should brand it. We should brand it. Yeah,
absolutely. So with that, then I'll ask you this. I have had some clients from America who have been watching from afar, and they saw the rapid record-breaking growth over the past 2 to 3 years. And now they say I'm too late to enter the market.
Well, again, how are they measuring this, right? I mean, I always say you can look at the past performance, but how do you know what's going to happen in the future? And I said that on an episode before with you, and I keep saying the same thing. Because of my financial background, I look at the fundamentals. We don't have a crystal ball. There's no way that we can predict what's going to happen in the world.
I mean, and I don't know when we're going to post this out, but Trump announced tariffs and then paused them 3 days later, and who could have predicted either?
Who can predict? Exactly. Right? So the way for you to ride these volatility fluctuation is that, if you find a property that you like, and I'm going to talk about this a little bit, and you have the means to move ahead, then go ahead. Don't take that risk of trying to time the market, because with that there's a lot of anxiety. You're going to be sitting there, oh my God, I missed out on this opportunity, or okay, you know what, the prices are going up right now. And what people do is it gets to the point that they're so anxious they'll drop out completely and say, forget about it, I'm not going to invest. So it's unfortunate. Now, if you're, I can understand that mindset, which I don't support if you're an investor. But if you're looking at a second home or a vacation home, what are you timing? You know what I'm saying?
Yeah, that's a whole nother. Exactly.
You've got the budget.
Exactly.
Right? You found something you like. You go for it.
Exactly.
Because you're gonna miss out on it. So that's my take on timing the market, and that applies to any kind of investment, but specifically real estate.
To this area.
Yeah, in this area.
In this area specifically.
Yeah,
so
100%.
to real estate and then this area.
Yeah.
So then bubble risk. Do you foresee, since you have the financial background experience and you're so well attuned to everything that's happening in the UAE and in Dubai, do you see a bubble risk?
No, there isn't. And again, I look back at the fundamentals. I'm going to mention that, but to point out to something, it's the supply and demand dynamics, right? So when you look at a market, and you can measure the supply and you can measure the demand, okay? And you see that the supply is outstripping the demand, that's when you start looking at, there's gonna be a bubble building, right? Now, we know the supply, and the supply is not phenomenal like people think, right? I mean, the figures, I don't remember the figures, but they're not in the 100,000, right? But if you look at the demand is not organic. What I mean is, the demand is not people who are born and they're going to reach the age of 30 and then you're going to look at housing, and you know what I'm saying? The demand is constant. And the demand that is supporting Dubai real estate market is from all around the world.
And that's an important note too. Actually, not even knowing, like you said, this flow is not going to be necessarily how we maybe had discussed, but I don't know where the timing's going to be on this when this video goes. What's happening in the United States, there was initially a fear saying, oh my goodness, how is this going to affect the UAE? To which I say, we're not very dependent on any one country. And first of all, our trade with the United States is very low, right? Which is what, and then the tariffs were equal anyways, 10% reciprocal tariffs. But in general, the UAE is not dependent on any one nation or what's happening in any one country.
No, and that's what made it special. That's what made and continue to make the UAE a safe haven. They're not dependent. They're not biased toward a certain country or a certain regime or whatever. And they're very neutral. And another thing is that I don't want to talk too much about it. I'm not an economist, but it's just common sense. The UAE rely on other factors, and not necessarily heavy manufacturing.
Exactly.
Where these
not
tariffs
any
is
one
gonna affect-
sector.
It's
Very
not, it's
diverse
not.
economy.
It is very diverse economy
And because
right now.
of that, it does hedge against
Yes.
any one issue happening. And that's strategic.
Very strategic, and you use the magic word hedging.
Yeah.
I had a question, and we were talking about it earlier. Is like, would that basically discourage investors coming from overseas? And I'm like, no. Anyone that's been looking at the at the stock market recently, like me, you've seen the market going down, and there's no indication of the volatility, and that's it. Now, if you want to hedge against your portfolio and against that volatility and unforeseen circumstances, what's better than putting it in a real estate market in the UAE, in a country that is very stable economically and politically. And again, I like to remind people, keep forgetting, zero
Income taxes, capital gains taxes, and property taxes. Zero. Which we as American citizens can't get away, unfortunately, from. But UAE has zero. They incorporated a 9% corporate tax, but still, if you compare that to most major, business hub nations, it's still slight, and it doesn't affect for what we're talking about.
And another thing that it came out to a conversation I had with a colleague about the same subject, and I'm like, there's another thing that's very important. People don't understand that if you decide to invest in the UAE, and let's say, you sold your property, and you've done a lot of good, and you have capital appreciation, all that kind of stuff. Whether you declare tax or whatever, that's a different story.
Okay.
But you can freely take the money out of the country.
Such a good point. That is something actually Americans do ask. Okay, so how easy is it for me? And I know because there are some countries in this region that are having a hard time, those people pulling their money out of that country. But here in the UAE, I said, is that as quick as it takes from a bank-to-bank transfer to pull your money out? The government's not holding it because there are no taxes. So they're just, here, there you go, as quickly as it is. And so there's, that fluidity and that ability to have access to your money so easily is great. And even the whole off-plan project process is so unique here in Dubai.
It is.
The fact that you can sell it before you take physical ownership of it. And if that's one of your strategies is to capitalize on the capital appreciation, you do that. If it's the long term, you do that. If it's the short term, you did that, which lands me or segues to another question that I have about when clients are so focused on the rental returns and they forget the capital, and maybe it's because in America there isn't that significant capital appreciation, or in Canada, and so maybe it's just not even, because I hear so many people call me and say, "What's the rental ROI? What's the rental ROI?" I'm like, okay, I can share with you a prime area that's going to give you a high short-term rental ROI. I can share with you the suburbs that's going to give you the high long-term. But hello, we are forgetting one huge part of the profit opportunity. So may you share?
Okay, so I have to adjust my jacket here because this is a big one.
Okay.
Right? Because this is two in one. Okay, two misconceptions, two mistakes in one. So the first one, I've been dying for a platform where I can talk about that and clarify it.
I love this.
Can I?
Yes, please.
Okay. So when people talk about ROI, return on investment, and everybody talks about it. It's a marketing collateral. The brokers are talking about it. Clients coming in, what's the ROI on this? And I like to pose a bit and say, okay, calculate for me the ROI on this particular investment. And they do the calculation, and I look at them and I smile. I said, that's not ROI. That is a simple rental yield calculation. Okay, why is this important? Okay, so rental yield calculation is basically you take the value of your property, what's written on the SPA, that's your property value, estimated rental, and you just divide the rent by the price, multiply by 100, and you get a percentage. Now, that's a very, very simple calculation, which is called rental yield. ROI is a more complex calculation because with ROI, You want to know the net return on your investment. So what you're doing is you're figuring out not the value of your property, but out-of-pocket expenses, how much you paid. You factor in the cash flow. You factor in capital appreciation if you're planning to sell it. You factor in mortgage if it is mortgaged. So you factor in all of these things, and then that's where you get the ROI. Now, why, again, this is important, okay? So let's just call it, what's the more accurate way to figure out your yield? And let's not get into this complex definition of what is what. Now, when we're talking about off-plan properties, and we're talking about off-plan properties with post-handover payment plan, that becomes very crucial. Mm-hmm. Why? Because if you are calculating your yield based on the price of the property, right? And let's give a hypothetical example, 100,000 dirhams rent, property's worth is 1 million, 100,000 by 1 million. Let's say you come up with, figure I'm pretty bad in figures, that's why I'm in sales. So let's say you come up with 6%.
Okay.
Right? But if you factor in a post-handover payment plan where, for example, you take possession of the property after paying 60%, and you have 40% post-handover. So you're actually renting it out, and you only paid 600,000, not 1 million. Mm-hmm. So your rental yield increases significantly. Mm-hmm. So that's why I wanted to clarify that. But after clarifying that point, let's say rental yield. People that look purely at rental yield and ignore capital appreciation. Why that could be a mistake? Because there are certain areas, and I don't want to mention them, I don't want to upset anyone, that these areas have been for the last 10 to 11 years providing the highest rental yield in the entire market. But they have not appreciated by 1%. Mm-hmm. Okay? And so what you need to do is you need to have a balanced approach. You need to look at areas where you look at the rental yield, okay, but also you look at the potential of capital appreciation. And, together, that's when you're making a sound investment.
Absolutely. And with the payment plan and factoring that all in. And that's why we this almost went viral, is when we talk about, that's why it's important to work with an objective real estate agent / broker that can help guide you, versus if you go directly to a developer, everyone's going to say, oh, this is the best, this is the best, that, but you want to look at a holistic approach to make the best decisions, which also leads me to another mistake that is made too often, and it saddens me, is not doing the research about the developer that someone is investing in and just thinking, okay, I know Dubai and the UAE is hot. I know that these are the average numbers that I can expect. I know that I can get the golden visa. So I Googled, I researched, I found this person, or here's this roadshow here, and I'm just going to invest.
Well, this goes for everything. It is a big mistake, and I've seen it happening, and I've seen it happening all the time. Not researching, not doing your homework, not doing your homework about the developer, not doing your homework about the area, not doing your homework about the building, not doing your homework about the broker, the brokerage company. These are crucial, okay? Because I'm going to say something right now. I'm going to give you insight into sales, and probably after I say that, all the salespeople in the world are going to go after my life.
Okay, I want to hear this. I like juicy.
Well, okay, salespeople. We are trained to create urgency. This is who I am. I do it all the time. I train my team to do it. I'm not going to apologize for it. Okay.
I feel like we're also built into that. It's our personalities as well to become a salesperson.
To become a salesperson. But what I'm saying is, part of our training is that you come into me, I'm a salesperson. I want you to buy now. And I will create the urgency. Now, 90% out of the time, the urgency is not smoke and mirrors. So it is due to the fact of scarcity, availability, limited availability, especially during EOI, special promotion payment plan. That's my job, and that's what I'm going to do. But you, as a buyer, you have the responsibility toward yourself, okay? I wouldn't say not to fall for that, but to take the time, and I'm not saying taking a week or 2 months, but take the time.
Yes.
Do your homework to get to an educated decision, right?
So let me ask you a question. Due diligence, very important. We talk about this all the time. Actually, I remember to what you just said. Dr. Mahmoud Albari from the DLD Senior Advisor said exactly what you just said. It is upon you, the onus is upon you, the investor, to do a little bit of due diligence. We're a very transparent real estate market, okay? It's very easy to Google and research someone's Google reviews, as you just said, etc. And that's onus is upon you. How do you feel about the real estate agents that give a kickback?
That makes my blood boil.
Tell me why.
Because it first of all, it's unfair. I mean, why? Because first of all, I don't want to use the word unethical.
Well, it's illegal.
Okay, it is. First of all,
It's illegal.
First,
but we know
foremost,
it's being done.
It's been done. It's been done a lot. It's been done a lot, but it's been done by brokers that are so desperate. You probably don't want to work with them.
That's what I want. I see. I did not prep you to say that.
No, you didn't.
Nothing.
You didn't. But
I wanted to use you. You are a very reputable expert that's been in this business, in this area for so many years before I came in. I come from a different standard in America when it comes to this. So many things I'm very, very, very impressed with Dubai, but the way that real estate agents are with each other in America, I think there's a lot that can be learned from the way we do it. Because if anyone has a whiff of somebody downplaying another real estate agent, giving an illegal kickback, you lose your license, you're out. You're finished. I mean, we're so monitored in the United States. I have to make sure my DRE number with my realty executives, Dylan, brokerage is on every single post. Someone makes a phone call, it goes to my broker, you have 2-3 warnings, and then your real estate license is gone. So my thing is, why would you as an investor even want to work with someone that is so desperate, devalues themselves, and is that desperate to give you a few $1,000s? And by the way, then what? Now you have a project or a product in the desert. Now what are you going to do with it? Because that person was not motivated enough to be with you for the long term, right?
No, absolutely. I mean, that kind of person won't last in the market that long.
Exactly. So that was a question I was just so curious as to what your viewpoint is. And then how do you feel about developers that are trying to undercut brokers and say, oh, we'll offer you this?
I think there's one word for it: stupid. Because the market is dependent upon brokers. Mm-hmm. It has been the case since 2003 or 2004. Mm-hmm. They add a great value. Okay, not all of them, but the majority of them. And I have seen throughout my experience working with big developers where I wouldn't say the word deliberately, they wanted to reduce their dependency on brokers.
Okay.
Because it costs a lot of money.
Right.
Right? So, and I've seen a lot of them, paying a lot of, investing into their own sales team, going into marketing campaigns that cost millions to lead generation, having offices all around the world. And yet they come back to the same point that, no, we cannot, succeed without working with the brokers.
That's interesting.
Okay? So the brokers still play a very important role in this market. I think in every market, okay, but especially in this particular market.
Yeah, I mean, the majority of transactions are conducted through brokers. So to your point, with regards to the role that they play, it's very important. And I didn't realize that some had tried that model of cutting them out because for off-plan, the commission is paid by the developer. So I can see how they tried to cut that. I'm sorry?
Yeah, they're two different things,
okay?
So what I was talking about earlier was not, cutting them off from a deal that was they should be paid for.
Okay,
right.
Right.
So, for example, what some are doing is that the developer, the broker, is the one that have introduced the project to the client. That's it. That's done. The minute you know that, then you owe that person the commission,
Correct.
Irrespective of whether the buyer comes to you again and again and again and again, and you engage with them. Okay, that's ethical, and that's how it should be done, right? And then what happens is that the client goes directly to the developer, and the developer looks at it and say, you know what? If I'm paying that broker 4%, I can give that client a 2% discount. I'll save 2%. Now, why is this stupid? Because if this is a very small market, and all what you need is 1-2 cases, and the brokers will not work with you anymore.
And that
guess
is the
what?
situation. That is the situation. And the
that's what
top
it
tier
is.
developers and reputable, like the brands that, DevMark represents, they don't do that. And it's smart. So that's also when we talk about desperation and why would somebody even offer to do that in a market where, you have the next broker that's going to come, bring you, let's say, hundreds of millions of dollars of deals. And for one person, you're going to ruin your reputation. It's not smart. So, okay, I appreciate you answering these. Well, Tariq, I thank you for bringing your wisdom and your beautiful energy to the Dubai Connect podcast and always being a source of information that's really relevant to people across the globe when they're making the decision to come invest in Dubai, in Abu Dhabi, in the greater UAE. And I look forward to seeing what DevMark projects you have in the works. You always work with only the best. I know when DevMark is representing a brand, I need to learn about what this is and share that with my American clients. So thank you.
Well, I want to thank you for having me here. Always give me an opportunity to be here. And I thank you for your platform, because what we talked about earlier is what you're doing is educating the people. You're not just there promoting services, you're also educating the people. And for me, it's something that I respect and I appreciate.
That means a lot to me. Thank you. Thank you very much. And with that, please make sure to like, subscribe, follow, and stay tuned for the next episode of the Dubai Connect. Until then, happy investing.